Hello, this is your daily dose of financial market trends. Meta just saw a massive attention surge while Nvidia slipped over concerns about AI profitability. And a brewing trade war between the US and Canada could shake North American markets. Let's break it down. Before we dive in, here's where markets closed yesterday heading into today's session. The S&P 500 finished at 7,675, essentially flat with a tiny 0.02% dip. The Nasdaq ended at 26,130, down 0.08%, while the Dow closed at 53,464, off about 0.2%. The VIX ticked down just over 1%, sitting at 15, while the 10-year Treasury yield climbed to 4.66%. Pretty calm waters overall. Now let's get into what's moving today. Meta is absolutely dominating the conversation right now, earning the highest buzz score we're tracking. The stock gained just over 1% and saw nearly double its typical trading volume. What's driving this? We're seeing massive attention spikes across social platforms and geopolitical angles, suggesting something big is brewing around Meta's ecosystem. For investors, this kind of coordinated attention across multiple independent signals often precedes either major news or positioning ahead of a catalyst. On the flip side, Nvidia is catching heat from multiple directions. The AI chip leader dropped 1.6% on elevated volume, and there's a clear theme emerging. Questions about whether the AI infrastructure boom can actually deliver profits. Despite Nvidia projecting 70% revenue growth and committing $279 billion to supply chain expansion, sentiment is shifting. Social chatter is intense, and the geopolitical angle relates to concerns about Nvidia's dual role as both supplier and lender to AI startups. If those customers can't monetize their AI deployments, Nvidia's aggressive capital commitments could become a vulnerability rather than a strength. Broadcom is another semiconductor name drawing serious attention ahead of its September 2nd earnings report. The stock slipped about 0.33%, but it's showing up everywhere, from social discussions to geopolitical analysis around chip supply chains. Broadcom sits in Nvidia's shadow, but plays a critical role in AI infrastructure. So investors are watching closely to see if the company's results validate the broader AI spending narrative or raise more questions about return on investment. Finally, Intel deserves a mention. The chipmaker gained nearly 1% and experienced a huge spike in social discussion alongside a regulatory filing. Intel has been the comeback story everyone's debating, and renewed attention suggests traders are positioning around potential catalysts. Whether that's optimism about its turnaround strategy or speculation around corporate developments, Intel remains one of the most actively debated names in tech right now. Let's zoom out to the bigger picture with 3 macro scenarios that could reshape markets. First up, the US-Canada tariff confrontation. The United States just imposed new tariffs on Canadian imports, and Canada is pushing back hard, threatening a full-scale trade war between two massively integrated economies. The bull case, with about 35% probability, is that both sides reach a compromise within 30 days, rolling back the most damaging tariffs. That would stabilize cross-border supply chains and support North American manufacturers who depend on seamless trade flows. The bear case, at 45%, is scarier. If Canada retaliates with matching tariffs and both countries escalate, we're looking at supply chain chaos, accelerating inflation, and the Fed forced to keep rates higher even as growth slows. That's a toxic combination for equities, especially industrials and consumer discretionary stocks. Second scenario, Nvidia's dominance of AI infrastructure. Beyond the stock price moves we just discussed, the strategic question is whether Nvidia's $279 billion supply chain bet pays off. The bull case, at 55%, assumes enterprise AI adoption accelerates faster than expected. Nvidia maintains its pricing power, and the entire AI ecosystem gets validated as real revenue starts flowing. That would lift the entire tech sector. The bear case at 30% is that AI monetization disappoints. leaving Nvidia overextended just as its customers struggle to pay their bills. That creates systemic risk and could trigger a sharp valuation reset across technology. Third, Bank of Japan policy normalization. Yen weakness and rising Japanese inflation are forcing the BOJ to consider ending decades of ultra-loose policy. The bull case, at 40%, is a gradual, coordinated tightening that supports the yen without shocking global markets. The bear case, at 25%, is an emergency rate hike above 75 basis points that triggers a violent unwinding of yen-funded carry trades worldwide. That would create liquidity stress across all asset classes and spike volatility everywhere. Quick housing update. The 30-year mortgage rate sits at 6.65%, up more than a full percentage point from last year. Housing starts have dropped 13.5%, while building permits actually rose 3%, creating a gap that suggests builders are permitted but hesitant to break ground. Inventory has climbed to 9.3 months of supply, yet prices are still inching up. This market is frozen, waiting for something to break the stalemate. On the earnings front, keep Broadcom on your radar. The chip giant reports September 2nd in, and given all the questions swirling around AI infrastructure spending, this report could move the entire semiconductor sector one way or the other. So what does all this mean for your portfolio? 5 things to watch. First, semiconductor volatility is accelerating as the market debates AI profitability. We're past the hype phase and entering the show me the money phase, which means more choppy price action ahead. Second, trade policy is back as a real market risk. The US-Canada situation isn't getting enough attention yet, but tariffs between integrated economies create inflation and margin pressure fast. Third, currency moves matter again. If the Bank of Japan actually tightens, the yen carry trade unwind could create forced selling across multiple asset classes, so watch for sudden volatility spikes. Fourth, the housing market remains stuck in neutral. With inventory rising but prices refusing to budge, either buyers capitulate and accept current prices, or sellers eventually blink and cut. That resolution will tell us a lot about consumer confidence and Fed policy ahead. And fifth, attention surges like we're seeing in Meta often precede meaningful catalysts. When multiple independent signals converge on a single name, it's worth understanding why, even if you don't act immediately. As always, this is educational content, not financial advice. Do your own research and consult a financial professional before making any investment decisions. That's your Morning Market Digest for Thursday, August 27th. Markets are always moving, so we'll be back tomorrow morning with the latest. See you then.